Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk. Chris, it's going to be certainly an interesting week to watch. We see that stocks are somewhat flat going into the all-important FOMC meeting this week. Of course, we'll get the rate decision on Wednesday and Powell's comments following that, which is really what traders are going to be listening for. What are your thoughts as we go into it with stocks flat here?
We're really kind of in a holding pattern here ahead of the FOMC meeting. Markets have been kind of waffling back and forth. We're down almost 1% this morning, kind of trading flat now. And what's really interesting is that the hot CPI and PPI numbers last week, especially the CPI being much hotter than expected, kind of sank the markets. There was that rally up the week before in the expectations that there would be a little bit of forgiveness in the CPI. Again, at 8.3% versus 8.1%, the numbers are just way too hot across the board, even with energy declining over 25 percentage points since that. You know, food's still expensive, rent is still expensive, and none of the other imports are still expensive, though the consumer is still taking price, and companies are able to take margins there. It's still way too hot for this to keep moving along. The question is, you know, is the Fed going to be in an over-tightening position, right? And if it is, then that's going to be a hard landing as opposed to the hopeful soft landing that we're going to see here in the markets. I mean, all you have to do is look at the Treasuries, the 2-year, which is very sensitive to rate hikes, is trading at 3.95%, and the 10 years at 3.5%. So that inversion is something that has been concerning people for a long time. And then when you look at what the Fed's going to do, it's an 80% chance that they're going to raise by 75 basis points, 20% chance they're going to raise at 100. That hasn't happened in a long time.
Yeah, well, Chris, we spoke about this with another guest as well, and I think that investors might have to exercise some patience here, because even if we do get 75 basis points, 100 basis points, it's not as if the market and the economy is going to find flat footing the next day. This is going to be a process that takes 12 to 18 months for it to play out. And we're just so used to over the past 10 years buying the dip, things correcting, liquidity in the system. So I think some patience just needs to be exercised here. But let's look a little bit more near term. When we take a look at your first chart here, what are the levels that you're watching in the Nasdaq 100?
Right. So the index is down about 7% from when we were on last, just over a week. And the big percentage move down was over 5% on the 13th when the CPI number came out. We broke support there at 12,613. Support in the index now sits at 11,710, 11,300. Resistance at 11,880. We're there right now. Actually, the index is trying to go positive here. We'll see how that comes into play in the end of the day. Overhead is, again, 11,918 with a target of 12,055, not even getting back close to that resistance level that we broke last week. The index opened today at 11,753. We need to close above that level to get this candle to show any positive momentum in the near-term trading aspect of it. And if you look at the bottom of the chart, we always talk about relative strength within the index. Last Monday, we're trading at above 50 in the RSI, a little bit higher. We hit a 37 today. That's kind of rallying a little bit there. Again, not quite an oversold condition, but pretty close to it.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.